So, as a Christmas rally has just begun, or it's just like a fake signal again? My name is Francois Ablé. So, this is the question that I will try to answer through this video. I'm the main trainer and founder of Global Street Trader Academy, which is online Canadian academy. So, if you're interested for learn how to trade, how to invest in financial market, please leave a message to the messenger for Global Street Trader Academy, or also I would kindly recommend you to send also a mail through the contact@jstacademy.com, and we'll probably keep in touch for you and also help you to getting successful on the financial market. So this is a great question. Now we know and we all agree that the Fed are sending a very high message, and we know that based on the fact that Mr. Jerome Powell said to the Thomson Reuters, he said that he know about the situation on the financial market. He know also about the level or the depth of the economy, and he think that the best thing to do is to going neutral, right? So this is like close the end of the era of the accommodating policy, because the second step of the cycle of the economy, because we will say like as soon, but we have like the expansionary step of the economy. We have a neutral. After we have like the decline, which is like send an information of the precession for upcoming, and then we have now the financial crisis or the emergency of the financial markets, right? So that's why I was always skeptical about the kept of the US dollar, and I always told you that I was probably the most bearish guy on the social media, and all my analysis was I was neutral or bearish on the US dollar index. And you will see it's just 10 months, or is pretty much 10 months that I'm bearish, and each time is always the same song. And that's why I told you not going with a strategy for bullish strategy on dollar, because I know the dollar. We know like professional traders know, and institutional traders know also the situation on the dollar and the level of the debt of the United States. Also, we have the tension of geopolitical tension with negotiation between China and United States, so they can afford to increase the rate interest on the United States and increase the value of the dollar. And like always, the dollar has always evolved with the tension of market, because the traders would like to get some like a secure investment. So that's why they just reallocating the portfolio based on the dollar, right? So now the Fed put like a very a great message to be on the to be neutral on the financial market. So it's the second step of the cycle of economy. So just close the era of accommodating and stimulus on the markets. So these steps just putting it's just putting the market on stall. But because the index was so much pressuring, right? The index was so much on pressure. So that's why in just 2 days with this event, we took probably close to 1,000 points on the index. I don't know if you realize that, but 1,000 points is in 2 days. That's absolutely crazy. It's just like people looking to buy like at lowest at possible on the index. That's why I told you in beginning on this week on the weekly market analysis, if you follow me, that we felt the bullish bias, the bullish momentum. We felt that, and it's coming. So that's why I told you, if you remember, when I present the this financial broadcast on the Monday, we were there. Do you remember of that? I told you that here I probably seen that the index or Dow Jones will be probably rebound, and we call that a dead cat bounce, right? The dead cat bounce. I told you that, okay? So, and I said, if you feel that the previous gap here on the bearish, because we seen that the buyers looking to doing a rebound, but the bearish put so much pressure on it, right? So that's why we see kind of this spinning and twisted candle here, and then we do a rebound and we opt for 1,000 points in just 2 days, like Monday and Wednesday today, right? So that's why it was very important to see. It's very important to see each Monday this fundamental analysis broadcast, which is weekly market analysis, because if you follow that, you probably make money on, like me, on the Dow Jones, right? It was pretty much easy. We felt that, right? Institutional traders and you know, experienced trader knows that we probably rebounds, and I give you free, right? Because if you see here, I put the weekly demand. I didn't touch anything, and it come to rebounds, and it was just for you. So now, what's the following based on what Jerome Powell said? We probably, as I said, we getting into the second cycle of the economy, right? So as you see here, we were to the expansion, like from the recent financial crisis to in 2008, like we got some like stimulus, and as we call that the ZIRP, right? ZIRP is zero interest rate policy, right? After that, before that, we were NIRP, like on the crisis we were NIRP, like negative interest rate policy. After we were ZIRP, and after the market continuing to grow, and the Fed missed the chance to normalizing the rate interest, keeping as the you know, hiking the rate interest in 2012. It was for the Janet Yellen mandate, right? She didn't do that. She keep continuing to do stimulus on the United States market and the index. So we keep growing, and now we've ended this era of the cycle of economy. Now we are in this era, like neutral or stabilization. Stabilization or neutral is a kind of the market are being stalled, right? They not increase they're not increasing the rate interest frequently. If they're expecting, for the perspective, in terms of perspective of monetary policy, they can expect to let's say 3 times per year. They could make 1 time, right? So that being said, essentially, if the Fed have the intention to increase the rate interest 4 times, they won't probably doing the 4 times. They're probably doing 1 or 2, right? Or if they want to do 3 times, there would be 1 or nothing, right? So they just stay neutral. They just not increase the rate interest very frequently as they did before, right? So this is the second step of the economy. That means the index, the index are probably priced this era, and it's not like it's not getting fast. It's probably 3 months or 3 months to 1 year max, right? 3 months to 1 year max. This is the length of this kind of state of the economy for the neutral or stabilization for rate interest. After that, we have the decline of recession. So that means probably the decline of pre-recession will probably starting after the second quarter of 2019, like as the most of economics expected, and Nobel Prizes too. And after that, we probably in 2020 the emergent or the crisis, which is the yield curve, right, inverted, right? So you have the regular yield curve, the flat yield curve, the band yield curve, and after you have the inverted yield curve, right? So we have all in this one in second step. So that being said, when you're starting the month of the December, which is probably the question is, it is a great time to do a Christmas rally. Possibly, right? It's still possible. So we probably people getting to buy massively the index, because we it was like so much getting so much pressure, and now it rebounds. So the buyers has now the strength and the confidence to going higher to break the another resistance, you know. But also very careful with that also, because we could also doing a correction until the white line here, which is kind of POC and is work on the is catch the sellers and the buyers on the on this level, which is 20,970. I know that now we above the 24,000. We are 25,000 and probably 370. We took like 1,000 point in 2 days. This is absolutely dementia. So my recommendation is to it's to use like the strategy to be bullish, right? To starting to still to get some like just waiting about like a correction and then buy all the low, right? Because we know that now we have to buy the market, right? If you take a look quickly on the monthly candle, you will see here monthly candle that is doing kind of a like tweezers, like a doji, right? This kind of candle of like we have a massive wicks here, and we probably close around here. So that being said, he didn't validating the possible bearish movement. He stay on this level. So that's why on the next month, which is upcoming, we probably be strong, but it won't be also like very quickly like this. It could doing like a back and forth as much as possible. So your strategy is only to looking for buying each low that we will make, because we know that he didn't going back very like very lowest. So now we know that we probably getting for a long position after the close for this candle, right? So that's why I told you guys to be very careful. So the question is to know if we starting the Christmas rally. Probably that's why the market has like rally so much. And my scenario based on that was to have a rally Christmas session, but very quick, right? Very fast, not like as the previous like statistically on previous period we do have a rally Christmas starting at September, or not September, like a close end to October and starting begin November, right? But in this time we probably have end or mid to December, and probably 2 weeks or 1 week of Christmas rally, or it's probably done, right? The question is, are we doing our like we like the bottom right there? It's probably right that we do the bottom, because we felt the previous gap here, and now we oriented to going on the up. And this is the monthly close. So if we close above the previous monthly close, that being said, that the market has, you know, grade to going long and doing a new record and highest point. So that's why I said for the begin on the month and the December, I recommend you to looking for works on long position on the Dow Jones. Anyway, I will let you know about that. And I don't know exactly if we starting to do the rally for Christmas. Probably yes or probably not. But one thing is pretty sure is we probably don't getting to short in the market right now like this, right? We probably continuing to do this level until the top here and probably do a correction, and then we starting to each low that we get, we probably going to buy the index, right? And for the DXY, you see here that we tested the fork that I draw since 6 months now, is the midterms draw, and then we're probably getting out on the back to the ascending channel here. So it's as long as the DXY is under pressure, that means said that the gold will rebound, then the gold will continue to be bullish. Oil also will be probably bullish, and probably the index also will continue to get increasing as we saw recently. So very careful to that, and make sure that you follow the movement and the shape of the cycle of the economy as I show here. We are neutral or stabilization. Okay, so thank you so much for watching this video. If you like it, please leave a comment, put a massive thumbs up. It support the channel, it support also all I do. And if you're interested to know how to trade on financial markets, you have to coming to GSTA. Will take care of you and getting itchy to be very successful on the financial market. Thank you so much for watching this video. Have a great day and see you around for the next video. Bye bye.